In this video, we're going to be reviewing one of my favorite real estate investment trust, VICI Properties, stock ticker VICI. Now, this is not your typical real estate investment trust. It owns some of the highest quality real estate out there. We can see it has one of the largest portfolios of market-leading gaming, hospitality, and entertainment destinations, including Caesars Palace Las Vegas, MGM Grand, and the Venetian Resort Las Vegas, three of the most iconic entertainment facilities in the Las Vegas Strip. So in this video, there is a lot that I want to discuss. Obviously, I want to jump into the business structure and lease structure of VICI Properties so I can point out why it's such a phenomenal REIT. I want to jump into valuations, and we also want to look at it from a dividend perspective. So let's go ahead and dig into some of those metrics. We can see over the past year, it is down around 14%. Now, real estate investment trust as a whole, down quite a bit over the past year. We can see even the Vanguard Real Estate Index Fund down around 6% over the past year. Now, a large reason for the downfall in the share price of REITs over the past year is because of the rising interest rate environment. People are moving to safer investments, but that does create long-term opportunities, in my opinion, especially when it comes to real estate investment trust. And if we come down here, we can see VICI currently has a starting dividend yield sitting at 5.79%. And if we jump into the dividend history tab for this company, we can see they've done a good job of increasing those dividend payments over the past 5 years, going from around 16 cents per share quarterly all the way up to now almost 42 cents per share every single quarter. So when we look at those dividend growth rates, I'll scroll down, we can see the 3-year sitting at 9% and the 5-year sitting at 17.42%. So phenomenal dividend growth for a real estate investment trust. No, I don't expect it to be this high moving forward, but I do expect their dividend growth rates to be quite a bit higher than a lot of other real estate investment trusts. Now, if we jump over to the dividend safety tab, keep in mind we are looking at a REIT. So we don't look at the typical payout ratio. Instead, we need to scroll down and look at the AFFO payout ratio, and we can see the forward-looking for VICI sitting right at 74.88%, and for the trailing 12 months, 74.76%. That's a pretty healthy range, in my opinion, for VICI Properties. Now, I think it's extremely important that we also jump into the investor's presentation so we can have a better understanding of how exactly VICI Properties operates. But before we do that, I want to go ahead and jump into my REIT valuation spreadsheet where we'll look at a few different valuation models quickly. And like always, if you'd like to be able to download the spreadsheet and join a community of dividend investors, you can head over to my Patreon page at the link in the description. Now, okay, let's go ahead and come up here and plug in VICI and hit enter, and you can see all of this data will automatically load in. We're currently looking at a 500-day change chart, so you can see the price changes has been pretty choppy, but it has been trending downward again due to those higher interest rates. Come down here, we can see analysts have a target price of $35.55. Institutional ownership extremely high at over 99% and a beta of 0.95, so you should see a little less volatility with this company. Now, the first valuation that we'll look at is the AFFO multiples valuation. Essentially, what we're doing is we're looking at how the market is valuing companies that are similar in structure using a price to AFFO multiple. We can see the average price to AFFO for these comparable companies sitting at 19.07. Now, VICI Properties' current price to AFFO sitting at 13.35. So according to this valuation, it looks like VICI is undervalued, and when we plug it into our formula, we come to an intrinsic value of $40.91, a decent bit higher than that current trading price for VICI Properties. Now, the next valuation that we'll run it through is the dividend discount model, and this values a company based on how much they pay out in dividends and how much that dividend is increasing over time. So I plugged in the quarterly dividend payouts for VICI over the past few years. This allows us to see the yearly dividend payouts and the growth rate for these dividend payments. We can see we have 10%, 9%, 8.33%, and the most recent dividend increase just a few months ago sitting at 6.41%. So again, really nice dividend growth for a real estate investment trust. Now, moving forward, I'm projecting a dividend growth rate of 4%, discount rate of 8.5%. That gives us a dividend discount model price per share of $38.36. So when we jump over to the output tab, we can see the two valuations that we use, the AFFO multiples at around 41 and dividend discount model at around $38.36, which gives us an intrinsic value of $39.64. So with a 10% margin of safety, it looks like our acceptable buy price sitting around $35.67, and with a 20% margin of safety, acceptable buy price of around $31.71. So yes, in my opinion, from a valuation standpoint, as of right now, it looks like there is a lot to like about this company, in my opinion. But I think for you to understand why this is personally my favorite real estate investment trust, again, we need to jump into the investor's presentation. And the first thing I want to point out here is that VICI Properties is what's known as a triple net lease REIT. Now, what does that mean? Well, essentially, it's a commercial lease agreement in which the tenant agrees to pay all property expenses in addition to base rent. So those expenses can typically include things like the property tax, the building insurance, and the maintenance. Now, this is really good news for VICI properties for a couple of different reasons. What it does is it allows them to easily predict their cash flows in the future. They have reduced operational expenses, and it can potentially lead to higher long-term returns and lead to a higher net operating income. So again, the fact VICI operates as a triple net lease REIT gives them a huge advantage over a lot of their peers. Now, if we scroll down to the 5th slide in their investors presentation, again, there's a couple of different things that I want to point out. First off, we can see some of these very high quality tenants that they have in their portfolio. And we can see that 100% of these tenants operate with triple net leases. Again, like I just touched on, that's a huge advantage for VICI properties. If we come over here and look at some of these tenants, we can see Caesars, MGM Resort, and the Venetian make up the vast majority of the annualized cash rent that they collect. Now, some people could see that as a risk, but when you consider the fact this is some of the highest quality real estate, some people could also argue that this is a huge advantage for the REIT. Las Vegas real estate is obviously not going anywhere anytime soon. So if we continue to scroll down on the 6th slide, again, some really important points that I want to point out right here. The first, we can see in 2020, their rent collection was 100%. Obviously, REIT tenants really struggled to pay rent during 2020, so the fact that VICI Properties was able to collect 100% of their rent during that time period is really good news for the company. You may have heard it said before that a REIT is only as good as their tenants, so in this case, it looks like VICI Properties is an extremely solid REIT. Now, if we look here, we can see the remaining lease term for VICI Properties tenants, 42 years. That is really good for VICI because it makes it very easy to predict what their rent collection will look like very far into the future. Now, one of my absolute favorite things about VICI and the way that they have structured their rent is the long-term CPI protected rent roll. If we scroll down here, we can see estimated CPI protection as a percent of VICI's rent roll over time. Now, essentially what this is saying is that a lot of their leases are protected from inflation. So virtually we're saying if inflation increases over time, then the amount they collect in rent from their tenants increases over time as well. And they're projecting that by 2035, 96% of their rent roll will be CPI protected, which is phenomenal news, especially when you look at inflation rates over the past few years. We can see in 2021, we had 7%, 2022, 6.5%. So the fact that VICI is protected from inflation over time is a huge advantage in the way they have structured their leases over time. And if we scroll down, there's one more slide I want to point out in their investors presentation. And it's really just a display of the compounding effect we're seeing from this REIT. We can see over the past few years, they have a 7.6% compounded annual growth rate with their dividend payouts. Again, for a REIT, that is very good, especially when you consider the fact that their starting dividend yield is currently sitting at 5.8%. 5.8% starting dividend yield combined with the fact you have a 7.6% compounded annual dividend growth rate leads to a huge snowball effect. And when you compare it to some of their peers, that compounded annual dividend growth rate, they are way outperforming. Take Realty Income, for example, another REIT that's pretty popular. They have a decent dividend growth rate at around 3%, but again, that doesn't compare to VICI Properties. So again, in my opinion, a huge reason that we should really be interested in VICI Properties is the way they have structured their leases over time. They're a triple net lease REIT. They have phenomenal tenants with inflation protected rent and around 42 years left on a lot of these lease contracts. So again, from a dividend perspective, a valuation perspective, and a lease structure perspective, I absolutely love VICI Properties. And again, I like to put my money where my mouth is. I wouldn't say that if I didn't believe it. So if we go over to my do-it-yourself investor toolkit, again, you can download this on my Patreon page, but you can see I currently have over $4,000 allocated to VICI Properties, around 3% of my entire portfolio. Now, if we come down here and blow down this chart, we can see I'm slightly up after you consider the fact I've reinvested dividends into VICI. I'm up around 2.75% on this position, so not a huge gain as of right now, but I really believe in this company long term, and I feel confident about its potential to give my portfolio great long-term returns. So there you go. There is a quick analysis on VICI Properties. I hope you have a better understanding of how this real estate investment trust operates as of right now. Again, like always, if you'd like to be able to download any of my spreadsheets, you can head over to my Patreon page at the link in the description. Seeking Alpha is also still running their Black Friday sale, so if you want to get a discount on Seeking Alpha, then you can head over to my link in the description as well. But with that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.